Bunch of years ago, I started to think about, well, what is a bubble? What do I mean when I have a bubble? Because I watched a lot of bubbles over my something like 50 years of investing. Let's say, for example, you can have prices high, which means returns low, and you can have that go on for a very long time. That doesn't mean a bubble pops. So I'm really looking at whether you get a pop, but still, it's an ingredient. I was asked to talk about bubbles. Is the market in a bubble? Stock market in a bubble? What's in a bubble? And what's happened is that a lot of new ideas, new technologies, new things come along, and they make fabulous revolutions, and they grow things, and that's great. But there's a tendency of investors to extrapolate the past and get and not pay too much attention to price. And when that happens, you start to emerge as somewhat of a bubble. By our measures, the bubble is not as what it was in 2000 and not what it was in 1929, but it's kind of like halfway there if I look at the types of qualities. Bunch of years ago, I started to think about, well, what is a bubble? What do I mean when I have a bubble? Because I watched a lot of bubbles over my something like 50 years of investing. And I basically thought there were 6 things that made a bubble in my mind, and I'm going to rattle them off, then I'll apply them so that you know what I think. First, how high are prices relative to the traditional measures of prices is a consideration. For example, are PEs high or yields low and that kind of thing. That's a consideration, but it's not what I mean by a bubble. The second is prices are discounting unsustainable conditions. So unsustainable starts to be part of this picture of a bubble. Unsustainable means that by the nature of the buying, whoever is doing the buying and however that supply demand, that means that won't be sustained, and that produces a correction or prices going down. And then there's this speculative element, number 3. So one of those measures of the speculative elements is new buyers in the market. They're attracted in the market. It's the sort of thing where, you go to a cocktail party and people who are never involved in the thing are investing in it. And that could be tech stocks and it could be real estate and whatever, but they're drawn in. The big thing is plenty of liquidity and ridiculously low interest rates. Now, you ask about the 1.6%. I think we have been in a 40-year bull market in bonds. So now you look at that 1.6%. That's a negative 1% about real. Okay, so you're guaranteed. And you ask yourself, if you're going to hold a bond, any investment, the only purpose of an investment is so you can sell it to buy something you want. And that there's big bullish sentiment. So everybody wants, not having these things makes you feel dumb, that kind of thing. Number 5 on my list is big purchases, forward purchases. Like if somebody's buying apartments that they don't own because they think that the apartments are going to go up. Or back in the days where I traded a lot of commodities, I would watch that those who used commodities would, rather than buy from hand to mouth, they would get a lot of forward coverage. In other words, buy inventory to protect themselves against the prices going up. And so when you look at what is the length of time it's going to take me to get my money back, if I give an investment nowadays in the United States, I'm going to have to wait about 50 years to give back the buying power to start, and then I'll start earning money. If I'm in other countries, some Europe and Japan, I will I will have less. And if I measured in all those countries in real terms, I'm going to have less money. So basically what that means if I just bought anything that didn't depreciate in real terms, if it just matched inflation, I'd be better off than to have those things. And so when they go from, as we have recently seen in commodities, when they go from not having forward coverage because prices went down and they kept falling and they say, I don't want to own it, to and then it going up and they say, I want to be protected against it going up, that movement causes a lot of buying and so on. So that's buyers that have extended those forward purchases are an indicator that I use. Let's say, for example, you can have prices high, which means returns low, and you can have that go on for a very long time. That doesn't mean a bubble pops. So I'm really looking at whether you get a pop, but still it's an ingredient. So for example, let's say if we were to take the bond yields, the bond yields are at extremely low levels. And so think about bonds as having a multiple. The multiples of bonds are, like 75 times earnings or something, depending on what bond market you're operating in. And so when stocks compete with bonds, they're competing with low returns. And so it's not unreasonable to think that the stock market could have a multiple of 50 times if bonds have a 75 time multiple. Why can't bonds? And that means a low return. So that's one of the considerations, but it's not all. A lot of liquidity, a lot of debt financed debt monetization makes for a classic bubble. Other items are new IPOs, with particularly if they have no earnings, high price to revenue, or in many cases, no prospect of making money. Those are bubble considerations too. So I would say you can't say the stock market is in the highest bubble. You can't even say that it's necessarily in a bubble. You have to distinguish which stocks are in a bubble or have been in a bubble from those that are not in a bubble. There are a lot of stocks that aren't. And that bubble is a little bit like the bond market's bubble. So I hope that gave you a little bit of flavor of bubbles and how I look at them and where we are. Thank you. Prices relative to the traditional measures. The second is prices are discounting unsustainable conditions. Number three, so one of those measures of the speculative elements is new buyers in the market. They're attracted in the market, and that there's big bullish sentiment. So everybody wants, not having these things makes you feel dumb, that kind of thing. Big purchases, forward purchases. Buyers that have extended those forward purchases are an indicator that I use.